Hi, this is James Shug at Westpac with the London end of day report for Wednesday, August the 1st. Look, markets were pretty much treading water for much of today ahead of the Federal Reserve decision, which I'm going to basically run through now. The FOMC statement after the two-day meeting said, well, it was more forceful with regards to further policy action, saying the committee will provide additional accommodation as needed, which replaced the committee is prepared to take further action as appropriate that was in the June statement. The economic assessment was downgraded somewhat too. The economy has been expanding moderately this year. In June, they're now saying economic activity decelerated somewhat over the first half of this year. The rest of the statement is largely the same. They've kept in place the conditional commitment to keep rates at exceptionally low levels until the end of 2014. Now, ahead of that statement, markets were up slightly in the US and closed mostly higher in Europe. The US market dipped after that statement, and the US dollar was stronger. So, although I would argue the statement seemed to be more committed to eventually providing further stimulus, there seems to be a bit of market disappointment, and that's why the US dollar was stronger, and I'll run through some of the consequences of that in a sec. There was a lot of data today. We had the ISM factory index for July for the US. It rose just 0.1 to 49.8. That's the second month running that the composite headline has been sub 50 after running in the sort of 52.5 to 55 range in the first 5 months of the year. So that was soft, but the ADP private payrolls measure rose 163,000 in July. June's was 172,000, so there's been a bit of an acceleration in jobs growth according to that measure, after April and May data were quite a bit slower than what we saw in the first quarter. So that was a bit of a surprise to the upside. Other figures included some decent construction spending numbers, third decent rise in particular in the residential component. In the UK, we had the factory PMI for July. It fell quite sharply, down from 48.4 to 45.4. That's its third sub 50 reading in a row, and in fact the lowest reading since the recession of 2009. The shop price index from the British Retail Consortium decelerated further, and house prices decelerated further. The annual rates for both of those running at their lowest since 2009. Some earnings results in the UK. Next was good. HSBC was good. That helped the UK market. The US market opened with a bit of a glitch in one broker, which saw I think quite a few stocks trade as much as 10% up or down or more, and that meant there was some volatility early on in the session. They're probably the main stories today. The other big one, of course, being that we're all still waiting to hear what the European Central Bank President is going to say after the ECB Council meeting tomorrow. Nebank of England tomorrow as well. So, given all that, we've got the Dow at the moment down 0.13%. It's at 12,991, just back under 13,000. That's just before 8 o'clock in London. The European markets all closed now. The FTSE up 1.4% today. The French market up 0.9%. German market down 0.25%. And the Spanish and Italian market, or Spanish market down 0.25%. The Italian market up 0.25%. Commodity prices have just dipped since the FOMC decision. We're looking at copper prices down 1.8% now today. Gold is down 0.8% at $1,601 an ounce, but oil is up 0.9% at $88.86 a barrel. The Aussie dollar, it fell from 1.053 to 1.047 against the US dollar straight after the statement was published. The high for the Aussie today was just under 1.055. So the US dollar stronger, commodities a bit weaker, Aussie a bit weaker since the Fed statement. In bond markets, we saw Italian and Spanish bond yields, particularly Italian ones, come in a bit further today, and the Germans issued 5-year paper at just 0.31%, although longer dated bonds in Germany saw their yields push up a little bit. And that could be partly reflecting a little bit of renewed hope after it sort of diminished a bit yesterday, that we're going to see something pretty awesome from the ECB tomorrow. That may not be a justified expectation, but there's certainly been a lot of talk about that possibility today. In Australia today, it's Thursday, we've got retail sales figures coming up and also the trade figures, monthly trade figures, both those reports for June. Okay, that's it for now. I'll be back again tomorrow, particularly looking forward to hearing what the ECB has got to say and reporting it to you. Okay, back tomorrow.